A very trusted way to place positions and enter or exit the market is that find areas of value which have been tested multiple times before. What is area of value? How can we find such area on the chart? How we should place our positions around area of value? And more of such questions will be responded in this video, so keep watching to get the answer of all your questions about area of value. Before continue our topic, please make sure to subscribe to the channel for supporting the channel to publish more videos like this. What is area of value? An area on the chart which price reacts to and has been tested multiple times, known as area of value, and besides can be supposed a very strong support and resistance level. As an example, look at this chart, Euro USD at time frame 4 hours. The price pulls up here and touches this point. Then again backs and retraces to the previous support level. After that, for the second time and third time touches this level and makes this level or area as an area of value. Now we have this area here which acts as a strong resistance level, and on the other side an area of value which considered as a support level we have at the bottom. Two procedures come through here. 1. Price breaks the top or bottom and pulls up or down. 2. Price is not able to break these two areas and therefore fluctuate between these two support and resistance levels, and the market is consolidated. But the very primary question which pops in trader's mind here is that will price fluctuate between these two levels forever? The answer is very clear. Absolutely not. We have two areas of value here, and in which direction price be able to break the mentioned levels, then we will have a powerful and strong movement in the market. As you can see, price breaks this resistance level at the top and pulls up strongly, and a good gain received by traders who placed the buy positions. Areas of value are always horizontal, and in case which we have the price fluctuating between two upper and lower lines, therefore we can suppose that there is a horizontal channel which its upper and lower lines are areas of value. The previous example we talked about was a horizontal channel. Now look at this zone. This time the time frame is daily. Again Euro USD chart. Price pulls up here and breaks this area which I draw, and pulls up after creating some candles above this area. More than 3 times price pulls down and touches this area. By seeing these touches, we can conclude that price wants to push down. So how did we reach this point? Look at these highs when the price makes after every touch of the determined area. After every touch we have lower highs. It means that the power of buyers is reducing gradually and sellers are on top. So finally at this point, this area of value has been broken by this candle, and a powerful movement to the down can be seen, as we talked about before. Example number 3. Again at time frame daily Euro USD chart. Assume this blue zone. Price pulls down here and being rejected by this level, but second time easily breaks the mentioned level and pushes down. No price is within this blue zone. It can be seen that 3 times price moves toward this area but couldn't pass through. So this area is assumed as area of value. The second thing we should determine is that to see whether the price is creating higher lows or no. If yes, then we should be alarmed that if the area of value being broken, we will have a powerful movement. Yeah, we have higher lows here, and we should place our buy position here above this zone, and our stop loss would be here below this zone. I mean the zone of area of value. Here how it's going. The mentioned area being broken here after a pullback, strong movement and ascending wave take place in the market. So very first thing we should do is that find an area of value which price reacts to multiple times. Then if the area of value is a support level, find out is the price making lower highs or no. And if the area of value is resistance level, see if higher lows there are or no. This tip helps you more to adopt a proper position. What's the philosophy of area value? The very first bottom or top which is being formed is because of some news, rumors, fundamental reasons, or what else. It's clear that a reason is lying behind the first top, bottom, or low, or high, or whatever you call it. But the second high or low at the same level as the first high or low is nothing, just this reason that traders conclude that at this point, once before, the price has been reversed, so more likely this time again that scenario happens. But after the second time, the power of wave specifies that the price passed through the determined area or not. It means that the battle between bears, sellers, and bulls, buyers, now has begun. And the volume of transactions speak louder than everything. So the area of value form like this. And the conclusion, when there are lower highs above the area of value, it's time to prepare yourself, place a sell position a little below the area of value, and your stop loss will be right here, a little above the zone of value. And the same for the time when there are higher lows. Below the area of value means that it's time to place buy position, as it's clear in the picture. Thank you so much for watching. Hope that this video would be useful for you, and don't forget that to subscribe to the channel for next upcoming contents. Have a good time.